Some analysts fear the world's largest economy could fall back into recession if the next U.S. president fails to solve the country's fiscal problem. That would be very bad for global stock markets. But a local analyst says he's not worried about the Philippines, especially with election spending kicking in next year.
Philippine shares ended the month of October at the 54.24 level. It's risen 24% in 10 months and is one of the top performing markets in the world today. But the so-called U.S. fiscal cliff at the end of the year may erase all that. The cliff refers to a legislated end to tax breaks and introduction of spending cuts to control the U.S. budget deficit. Economists say it will pull the world's largest economy back into recession, an event that could crash financial markets around the world. The U.S. elections next week will determine which president will handle the cliff. Should local investors be paying attention? Gus Cosio, president of First Metro Asset Management, says, not really. The Philippines has a strong enough domestic economy to keep chugging along.
We are in a very strong fundamental macroeconomic position, essentially because of our gross international reserves, a strong fiscal position of government, and a wide consumer base in the country. While other countries have to export to keep their economies growing, we don't have to do that.
A series of ratings upgrades also has the Philippines just a notch below investment grade. Foreign investors have bought up stocks, showing a keen interest in a gaming sector set to take off next year, as well as utilities and consumer stocks that are well positioned to take advantage of the Philippine population boom. Cosio says there is enough momentum to keep things going for the long term. He's even more bullish about 2013 when election spending becomes a factor.
I think there's enough momentum for general stock prices to close about 2 to 3% higher. And that's not bad for the last 2 years. I mean, for the last 2 months of the year. So when you're getting into the market right now, don't think of the end of the year. Think of 2013. And what I like about 2013 is it's an election year. And also, when you mention sectors, you didn't even talk about consumer stocks.
Right.
And consumer stocks or consumer-related stocks, be they part of the holdings sector or be they part of what they call the financial sector. I mean, the acceptance for that or investors seeking to buy consumer stocks, they really there's really a lot of them out there that are looking to get into that segment of the market, and they're willing to pay prices.
Year to date, property and financials have risen the most, up over 40%. Lagging behind is mining due to changes in industry regulations and a waste leak controversy at the country's largest miner, Philex. Caroline Howard, ABS-CBN News.